Hello and welcome in this tutorial on how to use the discounted cash flow valuation financial model template. So in the valuation tab, you will be asked to add certain assumptions regarding the currency you want to use, the start year, the corporate tax rate, revenue growth for the extrapolation period, the EBIT margin, and so on. Then these assumptions will be used to create a weighted average cost of capital that you can see here. And then in the next section, you can add the forecasted values for the target companies for revenue, EBITDA, EBIT, and then D&A, changes in working capital, and CapEx. This will help the model to calculate the free cash flows for the forecast years and the extrapolation period. And then we use the weighted average cost of capital that we found here to discount the free cash flows at present value and derive an implied valuation today. And then you can also have and see some charts and multiples based on revenue multiple, EBITDA multiple, and EBIT multiple.